All right, all right. We recording now. We recording now. Thank you so much. All right, again, back to it. So the construct of forming a trade, right? And I want you guys to understand. My goal of this presentation is to get you to understand you already know how to trade. You already know how to invest. We do it every single day, right? We trade time for money, right? We trade money for a service. So if you're going to get your hair cut, if you're going to get your nails done, right? We make trades all the time. But when it comes to the market, you need to have an idea. So you need to have a hypothesis. This is going back to science, the regular things that we learned in school. Then you have to have research behind it. So you need to do some analysis, right? So the idea would be, I think NVIDIA is going to go up or down. I think Intel is going to go up or down. Next, you need to put research behind it and analyze why you think it's going to go up or down. After that, you need data, right? So this is mathematic part of it. You need to look into how many days has a stock gone up within this given period. How many days, what percent of the time has the stock gone up since the beginning of the year? What percent of the time has the stock gone down since the beginning of the year, right? And last, you need to make a calculated bet. This is going to probabilities. We're going to talk about risk management later on in the presentation, but this is the basic structure of forming a trade. Anytime you're taking a trade, these are the four things that you need, right? And you need all four because you can have an idea and research and a calculated bet, but if you don't have the data behind it, the trade is probably not going to go in your favor, right? Or we can have a calculated bet, an idea, and data, but if we don't have if we don't have research behind it, the trade is probably not going to go in our favor. Going on to the next slide. Don't make trading harder than it already is. It's already hard. Go with the flow of the market, right? So this is going off of the last presentation I did where we talked about Lilly. Everybody wants to know, what is Lilly going to do, right? What is the healthcare space going to do? The healthcare space is the lowest performance sector of the year. It's down 18%. Is the flow of healthcare going up or down? It's going down. So go with the flow of the market. If you look in the back or you see these rivers or you see this waterfall, I would rather be flowing with the market or with the river and allow it to push me where I want to go, right? And we know this with music, clothes and shoes, entertainment, shopping, investing, right? We know what's trending. We know what's going on. Stay where the market is trending. That's where you want to be at. As far as clothes and shoes, I put Asics in here for a reason. Asics is now becoming more popular amongst my generation. I'm young, I'm only 20 years old, but Asics was popular back in the day, 10, 20 years ago, right? So do you see how there's always something trending? Things go out of style and come back in style. You want to be where the market is. So when Trap talks about what is the market rewarding, right? This is where you want to be. Okay, let's make this real simple. In the chat, is this chart going up or down? It's one or the other.
This is going down.
Going down. Put in the chart. Put in the chat. Is the chart going up or down? Down. Right. Down. So should we be long? Should we be going long or should we be going short? No real indication. Okay. Exactly. We should be going short. Right. Take the emotion out of it. Leave the name of the company out of it. Right. I don't care if this chart was NVIDIA's chart. The stock is going down. So you should be looking to short, right? If it's a company like NVIDIA where we know it's an amazing company, right? And we know that that chart is not really going down like this, then you would not look to short. Next chart. Is it going up or down? Put in the chat, up or down. What we think? Do we think it's going up or do we think it's going down? We got two ups, one down. Now up. All right, the overall direction from left to right. Has the chart, okay, I'm gonna put it like this. Do you see more red or do you see more yellow, which means it's going down, or do you see more blue? The overall direction. If I was to put a line through this chart, move in the direction, going in the direction where the chart or the price is actually going? Is it going up or down? Right? So you guys see more yellow. So we already know that this stock or this chart is going down. So should we be going long or should we be going short? Short. Exactly. We already know if we should be going long or short. We already know. Next chart. Is this going up or down? Up, right? Do we see more blue or do we see more yellow? We obviously see more blue, right? It's a clear direction of where this stock and where this chart is going. It's going up and to the right. So should we be going long or should we be going short? Exactly, we should be going long. So I'm literally here. I'm just the bridge. You already know how to trade. You already know how to invest. A lot of it is just narrowing down and not making very, very, very bad decisions that don't have research, ideas, data, and calculated bets behind them, right? Again, a chart is just fundamentals on the screen. This is a microcosm of all the fundamental factors that has happened with this specific chart or stock. Anybody want to guess what this chart is? What this stock is of this chart, this specific chart? It's NVIDIA, right? And the chart before that was Super Micro. And the chart before that was Pfizer. So I know a lot of people who likes semi-micro or super micro, but the chart indicates that it's going down. I know a lot of people who like Pfizer, but the chart indicates that it's going down. So we're short. NVIDIA is going up and to the right. So we're going long. Now, this is a tip for you. How many days does the stock go up versus down in the past 3 years, the past year, and in the past quarter? Right. So I know a lot of people asked me about my buy and hold. Why do I like specific levels? Right. What percent has the stock going up since the beginning of the year? Right. What percent? What percent of the time has the stock gone down since the beginning of the year? And that is literally going to tell you the strength of the direction of the stock. So if you just go from on every stock, right? Use ChatGPT, please. Go on ChatGPT. Hey, how many days or what percent of the time has NVIDIA stock gone up since January 1st? What percent of the time has NVIDIA stock gone down since January 1st? So if you don't know, if you're looking at a chart, or if you don't know the true direction, use data to help you understand the direction of the stock. Okay, go to the worst performance sector each year and find 2 companies to short. Right? So I talked about Google Focus and I showed you where to see the performance sectors of the market. You go to Google Focus for that. Then go to the best performance sector each year and find 2 companies to go long, right? So the best performance sector this year is financials. So I will look to go long Visa, American Express, MasterCard, right? There's 3 companies for you right there. The worst performance sector is healthcare. So I will look to short Pfizer and Johnson & Johnson. I would not short Lilly, but I would not be trading Lilly, right? So that's 4 trades for you right there. So if I already know that I'm going to be taking 20 to 30 trades in a year, I already have 4 right there, just based off of the top performance sector and the worst performance sector. That's 4 trades for you already. Next, a lot of people were talking about charting, and a lot of people wanted to know, what do I need to look for? What am I actually looking for on the chart to know if a stock is going to go up or down, right? These are the main patterns that you need to use. And I'm going to show you after this presentation, I'm going to show you an example of some of these patterns on the chart, right? So if you were in the last presentation, I showed you Lululemon is literally forming a cup and handle as we speak, right? So these are the patterns that you need to write down, and these are the patterns that you need to go and study and look at. Go in the S&P 500, go to the top 20 stocks in the S&P 500, and literally chart all of those stocks and try to find these patterns. that is going to help you understand not only on a chart basis, but on a fundamental basis, how these charts are aligning with fundamentals. I'm going to keep saying it. The chart is just fundamentals on the screen. So for one of these patterns to play out, that means a company had to beat earnings, they had to miss earnings, um, something political had to happen, right? So I keep talking about Lilly. I don't want to pick on it, but RFJK, until there is something there where he lets up and allows Lilly in the healthcare space to flourish, there Lilly is going to keep having hardship, right? So Lilly broke his trend line. Lilly is going to keep having hardship. Technicals are just fundamentals on the screen. That's all it is. Next, I want y'all to understand something to be abundantly clear. Every time you win a trade, you are taking money from somebody else. So every time you place a trade, you are telling the other person on the other side of that trade, I am better than you. I have more information than you, and I am going to make money and take money from you, and you're going to lose it. So this is not a game. This is financial war. You got people 401ks, pensions, all of that is in here, right? All the firefighters and their pensions, all the school teachers and their pensions. My granny worked at Mercy Hospital for 20 years, had a nice 401k, right? This is financial war. This is not a game. And you are competing with JP Morgan, Goldman Sachs, Warren Buffett, Michael Berry, Ed Secoda, Paul Tudor Jones, Ray Dalio, and I could keep going on and on and on. But this is not a game. You need to follow a system. You need to do something that works. So that means stop making all the little simple mistakes that we make all the time, because sometimes we're not disciplined. Sometimes we're not patient, right? Who can make the most money by capitalizing off of the mistakes of others? That's why they call it smart money and they call it dumb money. All of the money that dumb money puts into the market goes to the smart money eventually, right? You could get lucky over time, but eventually, if you don't have risk management, Warren Buffett and Michael Berry are going to gladly take the money from you. They don't care about what we're doing. Their goal is to make money for their shareholders and their company and their family, right? If they're managing something, they're trying to make money for their shareholders or the people who are invested in their fund. So we have to move like chess, and we have to stop treating this like it's a game, and we actually have to add structure to this and actually play this like it's war, because that's what it is. Every time you place a trade, you are telling the person on the other end that I'm going to take money from you because I have more information. I have a better idea. I have more data. That is what you're saying every time you place a trade. Next, trading is a probability game where you try to make more than you lose over a series of trades. It's not a game of perfection, right? So I said this on the last call. It does not matter how much money you make. It does not matter how much money you win. You can make $100,000 when the market opens up tomorrow. But guess what? If you take 3 trades and your stop loss is 30,000, right? And you lose 3 trades in a row, you're back down to 10,000. So if you do not have risk management, go look in JP Morgan's 10K, right? Trap talked about this before. Go look at a 10K of a company. They legally have to report their earnings, right? They have to make an article, and they have to make it's called a 10K. They have to put this on they have to file this with the SEC, and so do the banks. Go read Goldman Sachs 10K and go read JP Morgan's 10K and go see how they handle risk management. These people are hiring teams. They have a whole division for risk management. So while we're over here playing a game and we think this is a game and we don't want to have structure and we don't have risk management, I told you Warren Buffett and Michael Berry and Ed Secoda and Paul Tudor Jones, they gladly gonna take our money. They want us to be dumb money. That is what they want us to do. So your risk to reward ratio is the biggest factor of your profitability. All of us here, we want to make money. We want to be profitable at the end of the day. It's not going to be easy. It's not going to look pretty. You need to have a risk to reward ratio. I would start with 1 to 4, which means every time you're taking a trade, right, I'm risking $100 to make 400. So if I start with $1,000, I'll lose 100. I still have $900. Let's say I win the next trade. I make 400. I'm up $1,300, right? Now let's say I lose again. I'm down to 1,200. And let's say I win after that. I'm up 1,600. So can you see after compound and compound and compound, you're going to make more money by winning and losing at the same rate, which is 50%. So I'm winning once and I'm losing once, right? I'm winning once and I'm losing once. Over time, I'm making more money. If you have a 1-to-4 risk to reward ratio, you only need to win 20% of your trades. If you have 1-to-5, you only need to win 16%. 1-to-7, 12.5%. Right? Now, please, somebody tell me when could you take a test in school, right? When could we take a test and get a 16% and a 20% and still pass? Never. We never ever could do that. Trading and investing is different. Trading and investing is different. We have to play a game. We are okay. We are investing. Every major hedge fund manager, you got Mike Novogratz, Warren Buffett, Ray Dalio. All these people are competing in the same space and saying, I can make more money than you. That's what they're doing. They're literally competing against each other and saying, I can make more money than you this year. Right? They're trying to return 20%, 30%, 40%. But I'm letting you know right now, if you want to trade and you want to be successful at trading, you have to have a risk to reward ratio because that is the biggest factor that's going to determine your profitability. If you're losing 20, 30, 40, 50% on a trade, you're not going to last in the game, right? A lot of people want to make money, but can you last? If we have a recession, can you last that year? Can you last those 9 to 18 months? That's the average range of a recession, right? So now the market is going down. Can you last? Can you wait and hold out that period? Can you be successful in that period? This is a long game. We're going to be able to make money from trading and investing for the rest of our life. Play the long game. Don't try to make all of your money in one trade. Do it trade by trade. Make your money in increments. Next, you can learn to take small losses the easy way or the hard way. Either way, the market is literally going to punish you and take money from you when your system does not work. Take a 2 to 5% loss instead of a 30% loss. You have to protect your money and play defense, right? So this is one of my personal trades that I'm showing you, a loss. This was the 18th. Lost $65, right? $65. How many of you would be perfectly fine if you lost $65 in the market tomorrow? I would be perfectly fine. Or how many of you would be okay if you went and spent your money to go get a haircut or to go get your nails done or to go get your hair done or to go whatever you want, right? You want a new book, whatever you want. It costs you $65. But guess what? How good does it feel to keep 98% of your money, 95% of your money, 93% of your money, right? The goal is to stay in the game. How good does it feel? For me personally, it feels very, very good to know I took a $65 loss, which is not much, right? But I can go into the market tomorrow and start the week and have a clear mind because I did not lose a lot. I know I'm going to lose. The loss should be expected. You should expect the loss. A lot of us are taking losses and we're not even expecting them. Expect the loss. The loss should be very, very quick, right? So when I do lose a trade, it's going to be quick. It's going to be a lot shorter and a lot quicker than when I'm winning and when I'm making money, right? I talked about this on the call last time. The market falls 2 to 3 times faster than it does going up. So when the market is going up, it's taking time. It's being gradual. When the market is falling, it's falling fast, right? It's almost like it has excess gravity pushing it down. Your loss should be non-emotional. So when you take your loss, you shouldn't have any emotion attached to it. It should be, oh, my system did not work this time. Next trade. And you should learn from it. If there's an opportunity for you to learn from your trade, you need to learn from it. If you did everything you did in your plan, right? If you executed everything to the T, you did great, right? Now it's time to work on, can you refine the strategy or did your strategy just not work? And that's okay. If your strategy did not work, it's perfectly fine. How good does it feel to take a small loss, right? And then bounce back with a win? A lot of us are not even taking 20% off the table. So let me break this down for you how you need to actually start thinking of money when you're trading. 20%, that's gas for the month. How good would it feel to cover your gas expenses for the month? 50%, right? If you make 50% off of a trade, that's groceries. That's groceries for the month. 75%, you got your car insurance and your car note together. If you make 100%, we paying rent and mortgage now. 150%. You want to go on a shopping spree, right? You wanna splurge and do whatever. That's what you do that with. 200% plus that vacation that you want every quarter, or that vacation that you want every month, or that vacation that you want for Christmas coming up with the family. That's what that gives you. But you have to be disciplined and you have to be able to take the 20% off of the table. Stop trying to get rich off of one trade and do it one trade at a time. Take profit. It's okay to take 20%. It's okay to take 30%, 2 to 5% on options, or is that higher than options trade? As a loss, I don't know what you Claire, can you clarify that question a little bit more? But how good does it feel to take 20%, 50%, 75%, 100%, 150%, and 200%? We have to, especially if you just started off, you have to take what the market gives you. The market is never always going to give you 75%, or it's never always going to give you 200%. As you keep playing and you keep investing and you keep trading, those wins of 200%, 300%, 400%, they come throughout the year. But you have to be able to take the 20% gain, take it off the table. You're up 20%. You did not lose money. I would rather I would rather not lose money, right? I would rather make 20% than take a loss, right? I would rather say, oh, I should have held my trade longer than taking a 20% loss. A lot of us, we are saying that we should have held our trades longer just because we wanted to squeeze the money and we wanted to make more money so we could have more money. Do I still think this way with long plays? Be more specific, please, if you can. Next, I'm gonna give you guys something to help everybody out, because I know a lot of you are probably not doing limit orders, and I know a lot of you are probably getting into trades and saying, why am I down off rip? Stop overpaying for the contract, right? So, example, would you rather pay, in the chat, let me know, would you rather pay $1,000 for a jacket and get it instantly? Or would you pay $885 for the exact same jacket, but you just have to wait and you'll get it later on in the day? Tell me in the chat, would you rather pay $885 or pay $1,000? $885, $885, $885. Exactly. So if you're gonna wait and be patient, right, and pay $115 less just by waiting and being patient, stop overpaying for the contract. So you have a bid and you have an ask. If you're going long, right, you're going to the upside, only pay close to the bid. You see how wide this spread is? It's $1,335. This is $1,450. It's a very wide spread, very, very wide. And as you can see, if you look, you see the red bar is way, way higher than the green bar, which tells me that the sellers, who's ever selling the contract to me, because I'm the person who wants to buy the contract, right? The sellers have more power. Okay, let me put it like this. Would y'all go? So for my dudes out there, because y'all gonna understand this, right? So if you go into the barbershop and the sign on the window says the haircut is $50, right? But then you get out the chair and then the barber wants you to pay $80, right? Well, I'm having an issue with that because on the outside it says $50. So why are you trying to charge me $80 now after I got my haircut? It's the same thing with this, right? Pay for what the contract is worth. Stop paying extra because you're being impatient. A lot of us are paying extra just because we want to hurry up and get in the contract. But this itself, paying an extra $100, right? For no reason. Next, in theory, right? In theory, we should all be taking similar trades in investments? And I want y'all to be honest. You don't have to put this in the chat, but how many of you have actually stuck to one strategy for a month? One. So if y'all ask me, every time y'all ask me for, or I ask you guys what stocks you want charted, right? You see the same moving averages every time, the exact same ones. You see the same colors, right? You see blue, purple, white, red, and yellow. You see the same ones every single time. I'm not changing nothing. The goal should be to optimize the one strategy that you have and make it as best as you can, right? Steph, he shoots threes. Optimize the three. Focus on what you're good at. Focus on what you're good at, right? And this is from me doing research and reading books. I told y'all what the book was last time. The book is called Trend Following by Michael Covel, right? This is literally all these bars that you see. This is literally
Monte, you're muted.
Can you guys hear me now?
Yes.
Sorry about that. This is in the book, a picture that I took of the book that I'm reading, right? Now these are all different strategies. So you got RSI, Z score, moving average crossover, right? Trend deviation. Can we not see that all of these, most of them are performing the same, similar, right? So if we're looking at 0.8 to 1%, most of these strategies fall within that range, right? So all of them are doing the same thing basically. So your goal should be to pick one strategy and focus on that one strategy and make it as best as it can possibly be. The book is called Trend Following by Michael Covel, right? I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. Moral of the story, focus on one thing and get extremely, extremely good at that. So imagine if you had a business, right? And you're trying to do trucking, stocks, real estate, you're trying to get into a restaurant, and you're trying to get into, let's say, construction, right? You got too much going on. You're too spread thin. You got too many areas of a market and different markets that you're focused on, and you're never truly going to be amazing at one. Pick one strategy and get amazing at that. Going back to it, every time you see my chart, you're going to see the same moving averages on there every single time. I'm not changing it, no matter what. It's going to be hard, no matter what you do in the beginning. I play football, right? I play sports. You have to have work ethic and you have to have resilience. And you have to persevere. It's going to be hard. There's going to be days in practice where you don't do good, right? It's life. It's days in life where we wake up and we don't feel the best. We get sick, or I may not feel like going to the gym today, right? But we don't do things based off of how we feel. We should do things based off of, is it getting me closer or farther away to the goal? Next, this is personally me. Everything that I need to look at before I enter a trade. Do the work and don't treat the process. I need a technical reason to enter, right? So that's market structure or a pattern, or I got an entry signal, right? I need a fundamental reasoning to enter. So did the company beat earnings? Do they have good innovation? Do they have favor in the White House? So like Tesla, you see Tesla is running up because he's right by Trump in the White House. So he's gonna work hand in hand with him, and Tesla's gonna keep continuing to run. World conflict and resolution. So if you look geopolitically with Russia and Ukraine, right? How does that affect energy? If we're about to go into a war, or another country has deemed Ukraine sending US missiles to Russia as a direct attack on from the US to Russia, and we have a war, what is that going to do to energy prices? Is that going to make energy go up, or is it going to make it go down? It's probably going to go up. So if I was looking to invest or trade in the energy sector, that would be a fundamental reasoning to enter. And I talked about the grade levels of those five things, referring to economics, world conflict, politics, innovation, and earnings. World conflict slash resolution is the highest grade. So that's a grade 5 for me, right? That's a grade 5. So that would be high. Strategy, back testing. You need to back test your strategy, right? So for me, what is the strength of the trend, the strength of my entry signal, the strength of my strategy, the probability of success? You need to know the max days you're going to be in a trade. So every time I look at a stock before I trade it, I already know the max amount of days I'm going to be in that trade. And you need a stop loss and a take profit. Talked about risk management. And you need to make sure you're following your risk to reward ratio. And then after all of that, that's when I start looking at the options. So that's the strike price, expiration, open interest, implied volatility, delta to theta ratio, bid to ask. But to literally sum all of this up in actual things away from trading, right? Away from trading terms, is work ethic, is discipline, is patience, emotional control, adaptability, accountability, and resilience. You need work ethic because you need to actually go work and do the research to construct the trade, right? Following those four things. You need the discipline to do the same thing over and over and over again. You need patience because a lot of us, I did this before a lot of times, like probably like last year, a lot of times I would look for a trade, almost get a signal, I'll jump on it too fast and then it'll reverse on me because I was not being patient. Be patient, right? Wait. Emotional control. So when you enter a trade, the worst thing that could possibly happen is you get emotional because now you see the money going up, you see the money going down, right? Oh, I lost. What if I lose? I lost this much. Oh, I made this much, right? I'm up this much. Let me just take some profit now, or I'm up this much. Let me just hold it because I think it's gonna keep running up. Right? That's the wrong thing. That's the wrong way to look at trading or investing. Again, every time you take a trade, you're literally telling the other person that you are going to take money from them. It's not a game. So when you're thinking about war, right, you can't be emotional. There's a lot of times we fall out with people or we go through things with people around us, right? But I can't be emotional. I have to think logically no matter what, because if I'm emotional, that can cause me to do something that I can't come back from, right? Think about all the things in the world that I can name, right? I'm not going to name them, but all the people and things in the world have happened off of an emotional decision that have cost people their life or their freedom. It's a mistake. This is literally war. You have to think in a war mindset at all times when you're trading. Adaptability. So you have to be able to not change your strategy, but adapt it. I'll let you know how do I come up with the number of days to stay in after the presentation. I'm almost done. But adaptability, right? So no matter what the market is doing, I'll tell y'all right now, I'll make money off of volatility in the market. So the more volatile the market is, the more money I'm probably going to make just based off of my strategy. So you need to know why your strategy is working. Mine works off of volatility, no matter if the market is going up or down, just volatility in general, right? Because we can make money going long and short. But when the market changes, so let's say the market is less volatile in 2025, how am I going to adapt my strategy, right? So does that mean I not change my risk to reward ratio, but have lower profit targets, right? So instead of trying to make 50%, I'm trying to make 35% on a trade, right? Instead of trying to make 100%, I'm trying to make 80% on the trade, right? Because now we're in a low volatility market. The lower the volatility, the less money my strategy makes, right? But these are things that you have to know so you can adapt when the market changes. So for now, right, the market is reacting well to earnings, right? I think most stocks, they're up like 4% after they beat earnings or after they report earnings. So the next day, the stock is up on average 4% across the market. Now, what happens if we're in an environment where stocks, they're not reacting as well to earnings, right? What if we're in a market like 2022 where the market is going down? Companies are still beating earnings, but the innovation is not there. The whole economy is down. So it does not matter if you're beating earnings if the whole economy is down, right, as a whole, which means the whole market is probably going to be down. Accountability. When you lose a trade and it's outside of your system parameters, you need to take accountability, right? So for me, I showed y'all my loss last year. I always used to have the direction, right? What was my issue? The entry, right? I did not have precise entries. You got to be humble enough to say, I'm doing something wrong. A lot of us, me included, right? We grow up, we want to be right all the time. That's not how you should think of investing or you should think of trading. You don't have to be right. You just have to be, like chat says, you need to be in position, right? Because guess what? It's a lot of people who thought Bitcoin wasn't going to go to 100,000, right? Bitcoin didn't need to go to 100,000 for you to make money off of it. If you would have bought it at 15,000 or 6,000 or 3,000, you would have made money when it went to 10,000, 30,000, 40,000, 50,000, right? So do you see how right there people are choosing to be right over being in position? I would rather be in position than be right, because guess what? I could be in position and be wrong, take a small loss, 2 to 5%, and then be in position on something else and make 30, 40, 50, 100, 200, 300, 400, potentially 1,000% just from being in position. And last thing you need is resilience. You're going to lose. It's going to be hard. You're probably going to have a month or maybe a string of 2 or 3 months where you don't make money or you're losing money, right? That's why you have to keep your losses small. You have to keep them small, because guess what? If you lose 30% in 3 months, you're probably out of capital. But if you lose 2 to 5% over the span of 3 months, you're still in the game. You still have the rest of the year to make money. So let's say for November, I lost 5%, right? Just in the month of November. Hypothetically, let's say I lost 5%. Perfect. Okay, December, I'm gonna go get 20, 30, 50, 60%. And now the 2 to 5% loss does not even matter. But I stayed in the game. Versus if I lost 30% or 50%, I'm out of the game. Now, I did this last time. A lot of us, we need to start preparing for the week. Weekends are for preparation and the week is for execution. So you should already have your trades and you should already know what you're looking for in the market on. I do it on Friday and Saturday, but you at least need to do it on Sunday by 5 o'clock. Like the futures market is already open. I talked about looking at the futures market to try to tell the direction of the market for the morning. Futures market is already open. It opens at 5 p.m. on Sundays, right? So you should already be looking at that to try to get a direction of where the market is going to probably go for next week. But economic reports on Tuesday, we got consumer confidence and new home sales. That won't really move the market much. But on Wednesday, we have initial jobless claims, PCE, personal income, and personal spending. That is definitely going to move the market. Thursday, Friday, we got Thanksgiving on Thursday. Friday, we don't really have anything notable. Earnings, we have Zoom on Monday, ADI on Tuesday, and BJ Smuckers as well. CrowdStrike, a lot of y'all. So if you are in that CrowdStrike play, you definitely need to be paying attention, right? So if you are in a trade, if you take a trade on CrowdStrike or any stock that you take a trade on or a position on, you need to know the news or something that's coming up around it. So you actually have to do the research and know what can cause a stock to go up or down, right? So CrowdStrike is probably going to be earnings on Wednesday, but the market is going to look to see how AI is helping their business, and are they going to get more contracts, and are they going to expand into government contracts, which is going to get them more money in like a Palantir type way, right? So you need to know what's going on with the stock if you are in the option trade. Dell reports and Workday reports on Wednesday as well. We have nothing really notable on Thursday and Friday. For futures, I'm long NASDAQ, long ES, which is the S&P 500, short crude, long, or I'm short ZB. I'm neutral Bitcoin futures, and I'm neutral, or no, I'm long Bitcoin futures, and I'm neutral on gold futures. And contracts will roll over soon. So if you are trading futures, make sure you roll those contracts over for the next month. It happens on Friday. Stocks, options plays, I like Intel going short, Lulu going long, AVGO going long eventually, Nvidia going long and Kava going long as well. As far as the notes, this week will be driven by economic data with jobless claims, PCE, consumer confidence, and the market will trade based on those economics and the sentiment around Russia and Ukraine war tension. So again, going back to what I showed y'all last presentation, you need to pay attention in that specific order that I gave you because that is literally what is determining the movement of the market. So if we have a war with Russia and Ukraine, the market is probably going to fall like 20 to 25%. That's when you use that 200-day and 400-day moving average, buy and hold, right? So you already, before it happens, you already have to know. So guess what? If Russia sends missiles to the US tomorrow, right, a lot of people are going to be unprepared because they're going to look at their account and they're going to say, oh, why is everything down? Why is everything crashing, right? So if you looked at CrowdStrike, right, when the market fell, everybody panicked and everybody was worrying. That's when the market fell, right? I was buying during that time because I've seen that before, right? So you have to already at least expect it to come or have an idea of what could come before it comes. So if the market fell 30% tomorrow, I already have the levels where I'm buying that long term. You have to be prepared. When the market is doing amazing, like now we're up, what, 30% for the year almost around there? That's when you need to be preparing for a downturn. And then when the market is down, you should be executing and buying and preparing for when the market is going to go up, setting your take profit levels at 200, 400% long term. And that is all I have for the presentation today. So I'm gonna get to the charts and show y'all the charts because I know that's what y'all want to see. But before we do that, I'm gonna go ahead and answer some questions because I know you guys probably have a lot of questions. And you guys can go ahead.